Hey there, welcome back to Investaholic TV. In today's video, we're going to be talking about one of the most important concepts in stock valuation, the intrinsic value of a stock. Before we start, please keep in mind that the information presented here is for educational and entertainment purposes only, and should not be taken as financial advice. Investing involves risks, and it's important to do your own due diligence and seek advice from a qualified financial advisor before making any investment decisions. So, what exactly is the intrinsic value of a stock? Simply put, it's the true underlying value of a company based on its future cash flows. It's what a company is really worth, regardless of what the market thinks. Now, you might be wondering, how do we measure a stock's intrinsic value? Well, there are several ways to do this, but one of the most common methods is to use a discounted cash flow analysis. This involves estimating the future cash flows of a company and then discounting them back to their present value using a discount rate. The resulting present value is then considered to be the company's intrinsic value. Another way to evaluate a stock's intrinsic value is to use a price-to-earnings ratio analysis. This involves comparing a company's current P/E ratio to its historical P/E ratio and the average ratio of its peers. If a company's price-to-earnings ratio is lower than its historical or peer average, it may indicate that the stock is undervalued and has potential for growth. Now, it's important to note that there are some common misconceptions about intrinsic value. For example, some investors believe that a company's intrinsic value is the same as its book value, which is simply the value of its assets minus its liabilities. However, book value only gives you a snapshot of a company's value at a specific point in time, and doesn't take into account its growth prospects or future cash flows. Another misconception is that a company's intrinsic value is the same as its market price. However, the market price is simply what the market is willing to pay for the stock at any given time, and may be influenced by factors like market sentiment and investor psychology. In conclusion, understanding a stock's intrinsic value is crucial for making informed investment decisions. By using methods like discounted cash flow analysis and P/E ratio analysis, investors can get a better sense of a company's true value and potential for growth. But it's also important to remember that intrinsic value is just one piece of the puzzle when it comes to stock valuation, and should be considered alongside other factors like a company's financial health, competitive landscape, and industry trends. That's all for today's video. Thanks for watching, and be sure to hit that like and subscribe button for more content like this one.